The KSPI just absorbed a massive, absolutely devastating 8.29% drop. But if we dig just a little beneath the surface of this massive crash, there's actually a highly complex dual-structured reaction playing out right now. Today's explainer decodes this macro shock, the totally polarized capital flow, and exactly what you strictly need to be watching as the U.S. market opens. To help bridge the gap to the U.S. Open, our super energetic mascot Lauro is rushing in with the absolute latest data. We're going to use this rapid-fire briefing to track capital flow in real time. This tight transition window between the two markets exposes some massive data anomalies, so we really need to move fast. Okay, first things first, the crucial point is this crazy number. The KOSPI composite index dropped exactly 8.29%, closing out at 7,484.41. And the sheer velocity of this sell-off was so extreme, it actually triggered the third market-wide circuit breaker of the entire year, right in early trading. We even saw the KOSDAQ sidecar activate at the exact same time. A move of this magnitude, it's not just random variance. It's a fundamental structural repricing of risk across the entire exchange. When you map out the actual price action, the severity of this vertical drop is just wild. It broke straight through the moving averages. This wasn't some slow, grinding bleed, no way. This was institutional and foreign selling running at absolute full throttle right from the opening bell. When both of those major macro players hit the exit at the exact same time, you get this kind of unchecked freefall. And the semiconductor sector took the absolute heaviest damage. It's basically a sea of red. What we're seeing is a global semiconductor valuation reset playing out in real time. The flagship, Samsung Electronics, fell a staggering 10.18%. But this wasn't just some isolated domestic issue, guys. It was actually a direct transmission from the U.S. SOX Semiconductor Index, which fell 10.26% in the prior session. So the correlation here is practically 1-to-1. So why did this happen? Well, the primary macro driver for this shock actually originated over in the U.S. The U.S. May employment report printed at positive 172,000 jobs. That absolutely crushed the consensus estimate of just 80,000. We're talking 2.15 times the expected figure. This single data point instantly forced the market to reprice rate hike probabilities, and the CME FedWatch probability of a rate increase jumped to 65.8%. High multiple growth names immediately felt the heavy pressure of a rising discount rate. But the employment data was really only half of the story. We're dealing with a dual macro shock. The U.S. 10-year yield is sitting at 4.351%, totally confirming that rate repricing. At the exact same time, geopolitical risk exploded. The Israeli strike on Iran pushed WTI crude up 4.33% to $94.46 per barrel. So think about it. You have soaring energy costs colliding head-on with rising interest rates. That exact combination is what triggered the massive institutional liquidation. Yet right in the absolute middle of this catastrophic crash, we hit a massive structural anomaly. NVIDIA's CEO, Jensen Huang, visited Korea and publicly stated that AI-related equities are, quote, significantly undervalued. So while the entire macro backdrop was basically screaming sell, the single most important individual in the global AI ecosystem was standing on the ground confirming massive AI demand and structural catalysts. This clash of signals is where the real story actually begins. This clash created a severe divergence in the market, which, by the way, is incredibly rare during a circuit breaker event. AI platform names fundamentally decoupled from the AI supply chain. Naver surged 9.20% after agreeing to co-develop a gigawatt-scale AI factory with NVIDIA. But then, on the flip side, Hanmi Semiconductor, which is deeply embedded in the hardware supply chain, crashed 10.42%. And that was even on the day they disclosed a 44.2 billion KRW HBM4 contract. Same catalyst window, totally opposite reactions. And this paradox becomes even more extreme when we look at SK Hynix. They manufacture the critical HBM chips that power NVIDIA's AI processors, right? Well, during this exact session, Jensen Huang signed a multi-year supply agreement with them. This is literally the ultimate fundamental validation. Yet instead of rallying on the news, the stock was violently and aggressively sold off. How aggressively, you ask? Try 562.5 billion Korean won. That is the staggering amount of institutional short selling that targeted SK Hynix in this single session alone. They absorbed the session's absolute largest institutional short. So the obvious question here is, Why on earth would institutions launch a half-trillion-won short attack against the company that just locked in a multi-year contract with NVIDIA? Well, the answer actually lies in the systemic response. The KOSPI institutional short sell ratio surged to 23.12%. That is a massive 8.98 percentage point jump in a single day. You see, institutions classified the compound rate and energy shock as a structural downside signal, specifically for semiconductor supply names. They didn't really care about the individual NVIDIA contract. They opened massive, fresh short positions across the entire semiconductor sector just to hedge their macro exposure. And this relentless shorting forced a mechanical cascade. Brokerage firms sold in the spot market while buying futures, driving the basis, which is the gap between the two, well below its theoretical value. This collapse triggered algorithmic arbitrage programs, forcing an additional 375.7 billion KRW in automated selling. So the semiconductor decline was actually artificially amplified by these concentrated short positions and programmatic execution. But here is the hidden signal. This is the twist in the data that you absolutely must understand. While all this destruction was happening over in the KOSPI, foreign investors quietly turned into net buyers in the KOSDAQ, injecting 279.7 billion Korean won. Remember, they were aggressively dumping KOSPI but buying KOSDAQ. They basically split the compound shock into two completely separate signals. And the data proves exactly where that foreign capital went. Spoiler alert. It wasn't semiconductor dip buying. It was a massive structural reallocation into biopharma. Samcheondong Pharm took the #1 spot with 29.3 billion won. Liga Chem Biosciences took second with 23.8 billion, and Voronoi was fourth with 16.9 billion. In fact, 7 of their top 10 buys were biopharma names. This absolutely confirms that a highly selective sector rotation is underway. So let's quickly summarize this structured capital response, because this dual structure anomaly is the key to this entire explainer. We had one compound macro shock, but two entirely separate reaction functions. Institutions systematically shorted the semiconductor supply chain due to rate sensitivity, but simultaneously, foreign capital utilized the broad tech sell-off to quietly reallocate heavily into KOSDAQ biopharma growth assets. We are looking at a perfectly bifurcated market. Okay, so how do we trade this going into the US Open? Let's check our US validation watch list. The very first variable is the volatility index. The VIX is currently sitting at 19.52, which is actually down 9.50% from the peak of the Korean trading session. This easing suggests that while the structural pressure from rates is definitely still there, the acute, panic-driven fear from the Asian Open might actually be subsiding a bit. The next vital number is 29,242.00. This is the critical NASDAQ 100 futures pre-market level recorded at 5 a.m. Eastern Time. This is your exact baseline to monitor. If the NASDAQ holds this level or pushes higher right at the open, it confirms that the extreme selling pressure from Asia isn't fully translating into a U.S. tech liquidation, and that validates our thesis of a selective rotation rather than total market capitulation. And here is what you specifically need to be watching in the U.S. equity space. You must confirm if the bifurcation we just saw in Asia mirrors over into the US. Watch NVIDIA closely. If NVIDIA trades decoupled from the broader SOX Semiconductor Index shock, meaning NVIDIA holds its ground or even rallies while the rest of the semi-supply chain drops, then the Asian market anomaly is fully confirmed on a global scale. It means AI demand is completely separating from hardware valuation compression. However, as always, we have a strict invalidation level. This is your overriding warning condition. A sustained WTI move above $96 completely overrides the dual structure thesis. If crude oil breaches $96 due to further escalation between Israel and Iran, the selective rotation thesis collapses entirely. At that point, the dual structure is dead, and the market transitions into a uniform, indiscriminate risk-off signal. Energy is the final arbiter today. We've tracked the capital flow, decoded the data anomaly, and set our strict parameters. Now, the absolute crucial question is this. Will NVIDIA's armor hold up against a massive macro tidal wave, or will soaring energy prices trigger total indiscriminate capitulation across the board? Keep your eyes on crude. To catch these real-time structural shifts before the New York opening bell rings, make sure you hit subscribe. See you next time.